Today we spent 30 minutes to talk about small construction companies, how you should handle the year-end financial statement. Of course, it's not going to answer every question you have in your mind, but I have a couple of areas I really want to talk about because it is kind of important for you to know, even if you don't implement that this year, but you may be thinking of some other time, right? So small construction, by my definition, is your annual sales is less than 25 million. The reason I give you that number, you're probably going to sit here and goes, oh, Ying, you know, if I am $25 million construction, I consider myself big. No, by IRS definition, you're small. If you're under that, the reason I give you that threshold is because if you don't reach 25 million, there's certain accounting stuff you don't have to do. So you don't have to abide by those rules. So that is helpful, right? All right. So no responsibility disclaimer as always, okay? Please don't quote out of the internet and becoming your backup for certain tax claims. That would not be a good idea. And make sure you find corresponding information on IRS website and use that. Now, let's talk about small construction company. What is our general issues? We're going to quickly cover that. W-2, 1099. Of course, W-2, you know what that is. And 1099 is your subcontractor. Don't forget to have them fill up W-9. Right now is the time. And anybody who is LLC, anybody who is working under their name and social security number or IT number and the business owner for a construction company, you need to have them fill up the W-9 so you can issue 1099 NEC, non-employee compensation properly, all right? And workers' compensation. Now, when you do workers' comp insurance, and they ask you about your 1099. So you will, once you have your 1099, you can give to them easily, right? So that is related because they want to make sure any claim that resulted from your W-2 employee and your contractor, your subcontractors are covered by the workers' compensation. And of course, double check your state contractor registration. If you have your W-9 on hand, you can check to see whether that person registered as a contractor because they should. Otherwise, they may get denied for you to treat them as a subcontractor. Expenses, of course, you know what that is? Expenses, right? Things you spend to do your business. There's two big part of expense. Number one expense is the stuff you use to make you work, to do your work, like cost of goods sold, right? Like for drywalling, and that's your sheets. And for roofing, that's your, I forgot what you call those things, shingles, right? Are they? Yeah. So those are the things, cost of goods sold. Of course, you also have other expenses, which is another category called overhead expense. What is that? We'll talk about that later, okay? Equipment purchase is always important. If you are going to purchase equipment, do it this year. I say do it this year because in 2022, President Biden had done some changes that will eliminate some of the benefit where you purchase equipment, get a lot of deduction. They will slow down the deduction, so you will deduct less. All right, financial statement for year end. That is so important. If you are a contractor, your construction company, you come to do taxes with our firm, and out of my mouth, we will ask you, where is your financial statement? If you go, oh, Ying, I don't have one. I have this piece of paper for you. I wrote down what I did, and isn't that enough? Of course it is enough. We can do that and report taxes, but when you get audited, the auditor will say, well, Ying, where did you got that $5,000 material expense? And I say, oh, yes, you know, Amanda gave this to me. Here you go. She wrote it down, $5,000. That's why I put that on my form. The IRS goes, can you provide me with the support? So I went back to Amanda, goes, hey, Amanda, the construction guy, construction lady, did you have the $5,000 breakdown? Then Amanda goes, oh no, that was my estimate, or that wasn't really a real number. Or, oh yeah, I do have backup, but I just don't know I have it because I moved. You know, I don't know where I put it. Those are not a good answer. The good answer will be, yes, we have it. Here's the ledger, shows what day, what was purchased, who is the vendor. So financial statements should be that way, not the Amanda's way, okay? So I just want to kind of give you an example, a fake example. And year-end tax planning, that is of course important. If you really made a lot of money paying too much taxes, maybe it is time to plan your taxes ahead of time. If we do nothing, we tell you how much you pay already before you end the year, so you can go through your Christmas, New Year, worry about how much of taxes you need to pay. I'm just kidding. I mean, you can just put it to bed and know, oh yeah, that's how much. Yes, I can handle it. That's good. And then you pay it by December 31st, 2021. Leave everything belongs to 2021 in 2021. Don't bring them out to 2022. Just like you leave all the issues, whatever you did in Vegas, you don't want to take it back, right? That's a crazy version of you. So you want to have your 2021, the crazy version of you, stay in 2021. All right. For me, I don't know. Maybe I have a crazy version of 2021. I have to think about whether that's classified crazy or classified as crazy. So it sounds like, but it's very different mode, right? All right, I want to briefly talking about this. The reason I want to talk about this, because a lot of your construction businesses are seasonal. And if you're seasonal folks, you want to think of when is your time that you start your season. So let's say maybe you say, Ying, my business really starts in May. I don't start, it's not like at my beginning, my good year begin, my business starts in May. And then I run all the way to April. And most of my income was made by the end of December. So January, April, I do a lot of shopping. I do a lot of reorganization. I don't think I am a calendar year business. I am fiscal year business from April 1st to March 31st. There you go. And you are actually a fiscal year company. You have a seasonal work. But what happens if you are seasonal, but you actually select calendar year? What does that do to you? So you're going to be making money starting from April 1st all the way to December. So you got your biggest check coming in on December 31st. Then you close the year ready to pay taxes on all the money you just got, right? Am I right? Yeah, that's what you're doing. So you can't complain by saying that, whoa, Ying, what do you mean? I already spent all my money. And by the time we file taxes, it's April, right? So you made all the money in December and you spent it already in April. Then we calculate your taxes by December. It's like you got a big tax due, but here you tell me you have no money, right? So that is not your accountant's issue. That is your issue. You need to look at your year. So I want to mention this to you because it is common sense. Just think really hard. When is your business starting? When is your money coming in? Maybe your money flow in from September to December, just 5 months period. And you got all your money in one shot. Then you really should consider your December when you got all the money. That really should not be the day you file taxes. So you need to give yourself time. So maybe your fiscal year should start from September 1st and all the way to August 31st. So that way you have enough time to spend the money. Then you will have a real fair economic status with tax authority, with IRS, right? So to change your calendar year to fiscal year, and the form you use is called 1128. So I just put that in there for you. So that way you can consider that, right? All right. I want to talk about accounting method because we only had, remember, 30 minutes. So we need to cover this. Accounting method. What is accounting method? And I talked about the year, right? Now accounting method. I give you that form number. If you want to change that, you need to change 3115. That's the form, okay? And a accounting method is a set of rules used to determine how and when income expenses are reported. So it is a set of rules how and when income and expenses should be recorded. And look at this, I give you a little screenshot right here. Did you see that? This gray banner right here. I got this out of the tax return, every tax return. Doesn't matter, so proprietor, 1065, 1120S, 1120C, and whatever, okay? They ask you the accounting method. You can check cash, you can check accrual, you can check other. When you check others, you need to write it in, what that is, okay? And now you know that when if you file taxes with some tax preparer for your business, for your construction company, and that was never discussed, like you never even know what method you are in, I will tell you that you're probably in cash because the system, the tax software system, default everybody on cash if you don't answer that question. But there is a very good reason why people want to be on accrual or why people want to be on completion method or a complete contract method that we were talking about for the construction, okay? So now I just want to bring you awareness to what the form looks like on the tax return. So you need to carefully choose that. But now let's say you already did cash. Now after you listen to me and you go, wow, I need to be on accrual, and then you want to change, then you have to change with 3115. 3115 need to be filed before you file your tax return. So let's say if you want to make that change for 2021, and you need to submit that changes right now. You can't wait until your 2021 tax return is filed. Not after fact, has to be before, okay? So now let's go talk about this method. All right, cash basis, what does that mean? I will say to you that the cash basis, if you're running a really simple business, your cash basis accounting is exactly your bank statement. So whatever comes to your bank, that will be your income. Whatever goes out of your bank, that will be your expense, right? So I don't know whether you can still see my screen because my screen here kind of went blank.
We see the cash basis.
You can still see it. Very good. Okay, so that means we're good. All right. So just the screen that I look at to see where I am is gone. Okay, I'm back. So cash basis. So cash basis is like the bank statement, like I said. So when you receive it, they treat that as income. When you spend it, they treat that as expense. Let's say on December 31st, you bought a lot of things. You bought your, say, for example, you bought a small equipment, printer. You spent $1,000. But that check you wrote wasn't cashed out on your bank statement. Can you deduct the printer if you are cash basis? No, you cannot, because it wasn't cashed out from your bank. So cash basis just means that you actually need to see the impact on the bank statement. All right, so that is the simplest way to understand cash basis. You receive, you count, you don't receive, you don't count. But then you may be asking me, well, Ying, I am a landlord and I'm cash basis. When they pay me, I report. But what about my safety deposit? And I received it. So am I going to report that as income? And that payment you got is actually a prepaid, right? It's not really an income you're receiving yet. It is just almost like a deposit, a thing like a collaterals your tenant give to you. So you're gonna book that as a prepayment book that as a liability because you haven't really used it. So you don't count that as income because it's not really a deposit for income, right? So you still have to identify all the deposit. If it is bank loan, you don't take that as income, that's your loan. So among the deposit, you still have to make sure that they're real deposit. They're not something doesn't belong to income, right? But to recognize that income, it has to be deposited. Now let's look at accrual. So what is accrual method? Accrual method is saying that if you know that it's coming for sure, and you should report that as an income. For example, if you issue the PO number, and you are already billing to clients, and the invoice already went out, they just didn't pay you, but you already have on your book as a receivable. And in accrual method, that would be income already. So even if you don't receive it from client, you haven't received it from client, it's still income. But later on, if client refused to pay, then you just write it off as a bad debt and to reverse your income, right? So, but your income is related to your receivable. So you report what you send out to client. On expenses side, it's the same. So if you purchase that printer, because of you send out the check already, you already made that purchase. So you are counting that as expense, right? And of course, for large equipment, there's a requirement by IRS to say that it need to be available for service, put in service before you depreciate that. So that is kind of separated on the equipment side, but just to talk expenses in general. So for example, if you purchase a whole bunch of inventory and you sell those inventory already, then you can count them as a cost of goods sold, even though you haven't paid it yet, right? So accrual method is to bring in what you haven't really received it yet as income, and the expense to expense what have not come out of your bank yet to expense it out. So accrual method has a lot more to do with the balance sheet, not like cash method is more of what the bank account looks like. Now with construction, there's two more methods I want to mention to you. Of course, as a small construction company, you can be cash and you can also be accrual, but you can also be these two. So let's mention that. And one of them is called the percentage completion. What does that mean is this requires you to have a much better project-based accounting. So for example, you're building a house, okay? So the total charge you gave to the client was $500,000 and you projected to make $100,000 profit. So there's a $400,000 labor and expenses, right? Percentage completion means that if you can report your 500,000 project by by 2 times, by first month and second month, so you will finish that in 2 months, let's say. Then percentage completion will be that if you finish your year, half of them is done, then you will recognize $250,000 income. You will recognize the completion method, the related expense. So because of your profit is budgeted at 100,000, so your profit should come in as a 50,000 for that particular project, right? So this is where your completion method is just go by how much you're done. Then you base on that to carve out the expenses and also carve out the profit, right? Then the other method is completed contract method, which means you don't recognize anything. You don't recognize revenue. You don't recognize your expense. You're just gonna wait until it's finished. So when you finish, maybe you finish that on December 31st, then you will report your total income, your total expense, whatever left over. If it is profit, that you pay taxes. If it is a loss, and you better learn from your experience, how could you do a project that is a loss, right? So these are the two methods that you can use when you have a construction company, okay? And then one I want to mention is overbilling liabilities and a retainage. So overbilling liability just means that you billed more than what you did, then that is actually, you are not working. It's not your income, right? If you overbilled, obviously that's your liability. If you didn't finish, you would return that. So you recognize the overbilled piece as a liability, not your income. Okay, the retainage is the same. If you finish the construction, they hold on to 10%, they don't give that to you, saying that, until everything satisfies, a year later, you see that, then that it is going to stay on your receivable and waiting and waiting and waiting. And if you are a accrual method, your receivable will be recognized as income. But if you are on cash, it will not be. Okay, if you are on percentage completion, you probably already recognize that during the completion method, and or completed contract method, you probably already recognize that. So there is different play for these scenarios when you use different accounting method. You just want to be really clear. If after I talk today and you got everything you got messed up, but Ying, you just did words for me because I don't even know what I'm doing anymore. But I want you to just be clear of one thing. You need to be conscious about what accounting method you're using for your construction company. Is that okay? All right. So these are these two items I want to mention. Then I also want to mention that in the construction company, construction business, other than the income we were talking about, and I also want to talk to you about job costing. So there's two big things is related to construction company. A lot of times, small business, we don't have a very good method, or we just feel like we don't have the time to do that. Do you know that you can ask your CPA firm to calculate your indirect cost for you? Okay, what do I mean by that? I am saying that, let's say when you bid on a job, and you know exactly how much material would cost, you also know how much labors would cost. So you know these two by your heart because you know who you work with, and you also know the material. You already called the supplier, right? You got a pretty good handle. You got $100,000. That is the material and the labor. And then you also know how much you want to make. You're like, well, I want to make at least 20%, right? So then you got 120,000 quote in your head. But you're short of an indirect cost. Indirect cost means the cost that incurred by other people who support you, like your spouse, who are crying at home and don't want you to work. I'm just kidding, okay? That's not your indirect cost, even though that's your indirect life cost. It has nothing to do with the construction company. But I hear those stories, of course. The gentleman is working too hard and too much work. The wife, kids at home and never have time. I consider that is an indirect cost of lifetime, right? We are calculating the indirect cost by unrelated parties, like your secretaries and your community CPA's bill, and your anything that is not directly related to your project, but it's kind of your business. Do you know that you need to calculate that indirect cost? Okay, so indirect cost is estimated overhead, okay? And then you divided that by certain measures. For example, one of the construction companies that we work with, we calculate the indirect cost for them on the total labor hours. So we actually know last year, the total hours. The owner, he never do his hours, so we just count his hours as 2,080 hours, a regular, I know he worked more than that, but we just do a regular one, 2,080. 2,080 plus all of his contractor, subcontractor, employee. So we got this total hours in the company of last year, okay? So we also know that how many work that he did last year. So last year, bottom line, he was pleased with. So we take the total job income divided by hours and subtract all of the material cost and all that. So we came up with the dollar amount per hour that he need to put on in order to come up with this indirect cost. So let's say if his labor cost is 50,000 in that construction work, and the 50,000 he needs to pay for the labor, we ask him to tack on 8%. So that's how we will calculate indirect cost. So you need to figure out a way to calculate your indirect cost in such a simple way that when you in front of a client quoting for a job, you would have that in mind already. Don't just go, oh, I need to add indirect cost on you. I don't know what that is. Let me go back to Community CPA to figure that out. Then I'll come back to you. Don't do that to your client. And you just need to know that. Maybe you don't know how to calculate that. You can literally hire a firm to get that done for you for 1 year. But of course, that rate changes every year because your company also grows. You cannot use a rate that we calculated 5 years ago. That would be wrong. And you want to, some company actually the rates start going down because they're more successful, their sales is bigger. But some company, the rate is pretty consistent and some even grow higher. But so the rate is a moving target. You want to calculate that a year before. Right now, it is time to calculate indirect cost for next year. So when you bid next year's job, you know what to do, right? So that is what I want to bring to you on the job costing side. You know the material, you know the labor, but please add indirect cost. That indirect cost is science. It's not something you just pull out. You can pull out from the thin air, figure out amount, but it won't be scientifically fitting your construction company. You have yours, and every construction company is different. All right, so this is just to say that selecting the best accounting method, I think I am done with torturing you. If you felt that way, just know, like I said, if you have to take home for this webinar and to know about construction company, I want you to take home 2 things. Number 1, you know that you can change your fiscal year you can change your calendar year to fiscal year to fit your seasonal need. And you can also change your accounting method. So those forms are different forms, right? So that can be done. And then the second thing I want you to know is on all these methods I was talking about and is related to income. We want you to calculate the income scientifically. But on the expenses side, there's an indirect cost is also need to be calculated scientifically. So if you have anything you learned today, learn the term of indirect cost, learn the term of completion method and the completed contract method, cash method, accrual method, and then you talk like a pro. And when you go to your tax preparers and go to your accountant, and you want to use these terms to guide them, to trigger them to think more for you. All right, I hope you learned something and appreciated you staying with us, with me. And I think I'm really happy because you're here. Okay, bye.